Hi, Leeb Group viewers. Today's Wednesday, October 7th. I'm Greg Dorsey. Well, it was a quiet day on Wall Street. Stocks finished mixed on light volume. There was little economic data to push prices one way or the other. We did have mortgage applications up and oil inventories down a little, both encouraging but both inconclusive as to where the economy is really headed. Alcoa kicks off the third quarter earnings reporting season tonight. We'll see if that sets a tone for the market. Gold has been far and away the story on Wall Street this week. The metal closed at a record high north of $10.44 an ounce on the December contract. Concerns about the dollar and renewed questions about its continued status as the world's reserve currency get the blame for the move. But really, it's structural problems in our financial system that are the real culprit. Chances are the dollar will remain the world's reserve currency, at least for a period, and the basis for pricing oil for some time to come. But the G7 meeting this past weekend in Istanbul shows that there's little doubt that no one's going to step in to defend the weak dollar. The Federal Reserve's policies of zero short-term interest rates and this quantitative easing, which is essentially just printing money as fast as they can, is likely to keep the greenback under pressure. And absent a return of the fear trade from a sharp market sell-off. Together, gold and gold shares represent excellent choices in today's market. In addition to acting as a hedge against inflation, the metal offers downside protection in the event of a general stock market sell-off. The gold shares, meanwhile, give you leverage to the rising prices for the metal and will likely continue to advance if the stock market continues to move higher. Equity valuations overall for the market are stretched. The credit market continues to signal weakness ahead. You've got T-bill yields at 6.5 basis points. 30-year treasuries are back below 4%. And given the economic data, the tepid economic data that's been coming in, companies are likely to offer cautious guidance for the fourth quarter and beyond. So far during the rally, investors have shrugged off guarded corporate outlooks, and stocks, bonds, commodities, they've all moved in the same direction, which is really unusual. So we can't rule out more of the same, with stocks gaining further. But again, we just can't emphasize enough the downside risk here really warrants a very cautious asset allocation mix. Well, that's it for my gloomy reports for the day. Be sure to tune in again soon.